In this video, I'm going to show you exactly how you could invest your first £100 with trading 212. And don't worry, I will hold your hand through this process as it's aimed for complete beginners. Now, the first thing to do is obviously download the Trading 212 app, sign up using your details, and then deposit your first £100. Now, when you first sign up to Trading 212, by default, you are going to be put into the Trading 212 Invest account. Now, this will allow you to buy stocks and shares with your first £100. And there's nothing wrong with using the Trading 212 Invest account, but this in the UK is what we call a general investment account. And what you really want to do in order to avoid paying taxes later on in your investment journey is to invest within a stocks and shares ISA. Now, at the top where it says 212 Invest, that's actually a button and you can press that. Now, when you press that, a new menu comes up. And then when you go underneath where it says 212 Invest, where it says 212 Stocks ISA, that is where you can open your stocks and shares ISA. Now, the benefit of a stocks and shares ISA is that you're going to avoid paying taxes. For example, if you invest into companies and they pay out dividends, if it's invested within a stocks and shares ISA, you're not going to pay tax on your dividends. Also, if you sell a share and you make a profit, you also don't have to pay tax, provided it's in your stocks and shares ISA. Now, one thing to note with the stocks and shares ISA is that every tax year running from the 6th of April of the current year to the next year's 5th of April, you can only deposit a maximum of £20,000 into your Trading 212 stocks and shares ISA. If you have an ISA somewhere else, for example, a cash ISA, this £20,000 ISA allowance also applies to that other type of ISA. So if you have an ISA elsewhere, you might want to check how much you've deposited into that in the current tax year. Now, when you sign up new to Trading 212, you can receive a free fractional share worth up to £100 just by signing up using the link in my description box down below. Now, if you're watching this and you have already signed up to Trading 212 and it has been less than 10 full days, then you can still get your free fractional share just by doing this, pressing the 3 horizontal line menu at the bottom of the screen. Next, scroll all the way down until you see the section Use Promo Code. And in this section, just use my code JUBAIR and you should receive your free fractional share. So once you've done that, you signed up and received your free share. Next thing you want to do is to actually deposit that £100. Now, on Trading 212, it's very, very simple. Now, all you have to do is to press the blue button with the plus symbol. So when you press that, by default, it will be 1,000. You can just press backspace once and make it 100. So just like that, you can add £100. But remember, this video is specifically for £100. If you want to add £10, £1,000 or £10,000, it's completely up to you. Now, I already have my bank linked to Trading 212. So if I wanted to add another £100, I can do this easily through my bank. So after you do that, you just press the blue deposit button and this will direct you over to your bank and then you can add that £100. Alternatively, you can actually press this button here where it says my bank account. There are a few other deposit methods that you can use. For example, an instant bank transfer, a bank transfer. If you already have cash in your Trading 212 Invest account, for example, you can also do that. But do bear in mind this counts towards the ISA allowance. You can also use a card, Apple Pay or Google Pay, but I actually don't advise this as after a certain point, you will be paying a very high fee for this. So now that you have your first £100, congratulations, you are one step closer to investing, but let's learn the basics before we do that. Now, where you might want to go is at the bottom of the screen, the magnifying glass, just press that. So over here, you can actually discover new stocks and shares that you can invest into. Now, it's very important to note that I will never give financial advice, so I will never tell you exactly what to invest into. And the reason behind this is pretty simple. I, along with every other human being on this planet, has no idea what stocks are going to be good and what stocks are going to be bad. In fact, even the best of investors have no idea which stock is going to be the best performing stock for the next year. And that is why they would invest into more than one stock. If you knew which stock is going to be the best stock for the next year, you will only invest in that one stock because you know investing into anything else is just going to dilute the potential return you can get. Now, on Trading 212, you can invest into individual companies, for example, Nvidia. So let's go into that. Now, it's worth mentioning that in the stock market, the value of every share goes up and down basically on a second by second basis. There is no predicting what's going to happen next. For example, Nvidia over the past year has gone up by 28%, but since 2019, Nvidia has gone up by 45%. 1000%. Now, we should only invest into a company that we believe will be profitable in the future, because if a company is profitable, then that means investments right now will make sense for the growth of that company to make more profits and for that company to become more and more valuable. More investment money means the company value goes up, meaning any investors who had invested in the past will get a return on their investment. Now, the dangerous thing about investing into companies is that the value of the company can go down. For example, right now Duolingo isn't doing great. Over the past 3 months, the company has lost more than 50% of the entire stock value. So just a few weeks ago, the company was trading well over $500 per share, and currently that sits at around $174 per share. Over the past 6 months, the company has lost over 65% of all of its value from the high. Now, this means if you had invested into Duolingo a few months ago, you would be down by 65%. Now, in order to not take these risks, you can invest into a bunch of different stocks, and that will reduce the impact of your portfolio when some stocks inevitably go down. Now, if you didn't know what portfolio means, when you go into your home screen on the stocks and shares ISA on Trading 212, you're given a value, which is a number. For me, that's £120,600. Now, this is the sum total of all of the investments that you hold. As you can see, I do hold quite a bit of cash, but I also do have some investments, about 54 shares in the Nasdaq 100. Currently, those shares are worth £24,552. I am also down on these by around 3.65%. So this includes my losses plus my gains to add to my portfolio, which is the total value that I would get right now if I sold out of all of my holdings. Now, like I said, when you buy a stock, you should be 100% confident that you believe for yourself that that stock will go up. Oftentimes, beginners go straight onto TikTok, on Facebook, and look at other people who have been investing for a very long time and seeing what they are invested into. Now, a lot of the times, these experienced investors would have bought these companies for a very low amount. For example, some people bought Nvidia when it was less than $10 a share. This means that even if the company goes down by 60%, these people won't be losing money, but because you're buying at a completely different time, you'll be more impacted by any negative events that happen after buying it. So please be very careful before investing into anything. Do your own research, please. Now, anyway, let's say you've done your own research and you want to buy Nvidia with your £100. It's really simple. In order to do that, all you have to do is to press the big blue button at the bottom where it says buy. Now, over here, by default, it will say the number of shares, but remember, one share of Nvidia will cost you $180 right now. That's over £100. So what you want to do is to press where it says number of shares, change that to value. Now, over here, you can actually put in £100. Now, obviously, you won't be able to buy a full share of Nvidia because that costs more than £100. But with Trading 212, you can actually buy fractional shares, which means you can buy a part of a share if you don't have enough money. So with £100, currently I will get approximately 0.7 shares. Remember, like I said before, the value of stocks and shares goes up or down minute by minute. So the exact amount I'm going to get, I won't know until Trading 212 has executed my order. So anyway, if I wanted to do this, all I have to do is press review order and then send buy order. Do bear in mind, if you are in the UK within a stocks and shares ISA, you can only buy and sell in pounds. So there will be a foreign exchange fee, which is currently 0.15% on Trading 212, applied to any orders that are not in pounds. For example, Nvidia is in dollars. This will also happen when you sell because it has to be exchanged back into pounds. So do bear that in mind before you want to go ahead and buy and sell American shares. Now, here you asked the question when I was talking about individual stocks. If individual stocks can go up a lot and down a lot, what's the point of actually investing into them? We know as investors over the past 100 years plus, the stock market overall has returned a positive result. This is on average of over 6% a year. Now, there are a class of investments called funds, which basically take your cash and invest them into a variety of different companies. I'm going to show you just one example in this video. This is a fund that tracks the S&P 500. The S&P 500 has been used for decades as a benchmark of the overall stock market. What this basically means is that most people want to be on the same level or beat the performance of the S&P 500, which has over the past 100 years or so given an average result of a positive 7 to around 10%. Now, over long terms, if you can get around 7 to 8% per year, then you can actually financially plan and retire early. You can say you can take out around 3 to 4% of the portfolio, let it grow at around 8%. And if you have a large enough portfolio, you can probably retire off of it. Now, this video isn't financial advice. And if you really want to get into it, maybe look into hiring a financial planner or a financial advisor. But anyway, on Trading 212, if I buy this fund, it will automatically track the S&P 500 for me. There's many different ones. It's not just from iShares. I'm just showing you this as an example, as it's a pretty popular one. Always do your own research before buying anything. This includes ETFs, stocks and shares, or even gold. Now, over the past year, this ETF has returned a positive 7.73%. Since 2019, it is up by over 350%. Now, in my opinion, by buying a fund maybe like this, it takes the guesswork and the pressure off of buying individual stocks, which could potentially go down a lot, although they can go up a lot. Now, the S&P 500 has had a very good track record of giving positive results over long time periods. However, remember, past performance is no indication for future performance, so anything can happen in the stock market. So if you did decide that you do want to track the S&P 500, or you want to track a different index, or you want to buy everything in the whole world, you could go for a fund like this. Remember, I'm not giving financial advice. There are tons of different options to go for. But this particular ETF does actually invest into most of the world stock market. So if most of the stock market is going up as a function of time, you can benefit off of this by just buying one fund. The other benefit of buying a fund like this is you're paying in pounds, so there's no currency exchange. You're also paying a very small fee. If you were to buy every single stock on Trading 212 around the world, it's going to cost you tons of fees. But here, the fund manager is responsible for most of the fees. You are definitely paying a fee to be involved in this fund. This is called the total expense ratio. However, those fees aren't taken out from your Trading 212 balance. They are just taken out from the performance of the fund. So you don't actually have to worry about paying that fee. Although over the long term, higher fees within funds, so fund manager fees, can actually seriously affect how much money you get to keep over the long term. As you can see, I already own 2 shares of this, but if I wanted to buy a fund like this, all I have to do is to press the big blue buy button. If you don't have a share already, you will only see the buy button. So over here, I'm already on value, but you can change the number of shares. Let's stay on value and type in £100. So that's it. Each share for this fund is only around £6. So with £100, I will get over 16 shares. Currently, as I speak, that's the market price. So when I'm done with that, all I have to do is to press review order and then send buy order. So just like that, you now know how you can invest your first £100 using Trading 212. So make sure to check out some of my other videos, and I'll see you in the next video.